Question 1. Suppose that Halave used her own maintenance crew to build an additional wing on her existing facility. What would be the proper accounting treatment for the following items? A. Architect fees.
It is calculated as a percentage of the final cost of construction. During this initial time, the architect may charge an hourly fee and they may also ask an upfront retainer to begin work.
B. Cash discounts earned from prompt payment on materials purchased for construction.
The construction materials should be recorded as a reduction in the expense associated with the purchase of the materials. Subsequently, Halave should debit the accounts payable and credit the cash discount.
C. Interest on money borrowed to finance construction.
The interest will be classified or to be treated as accrued interest for the reason that the value of interest has been incurred but has not been paid. In addition, the proper way of recording the transaction is debiting interest expense and crediting the accrued interest.
D. The cost of mistakes made during construction.
The cost of mistake made during the construction will be handled by Ms. Halave herself, because she is the one who handles the maintenance crew that work on building her an additional wing on her existing facility.
E. The overhead costs of the maintenance department that include supervision, depreciation on buildings, and equipment of maintenance department shops, heat, light, and power for these shops, and allocations of cost for such items as the cafeteria, medical office, and personnel department. The overhead costs of the maintenance that include supervision of the following as stated should use the accrual accounting method due to the fact that it tries to match the expenses from the revenue of their company. F. The cost of insurance during construction and the cost of damages or losses on any injuries or losses not covered by insurance.
In any insurance, the risk is transferred from the insured to the insurer. For undertaking this risk, the insurer charges the amount which is called a premium. This amount is paid unironically by the insured to his insurer.
Question 2. Suppose Halave purchased a new machine. It is clear that the invoice price of the new machine should be capitalized, and it also seems reasonable to capitalize the transportation cost to bring the machine to the facility. A. The new machine is heavier than the old machine it replaced. Consequently, the foundation under the machine had to be strengthened by the installation of additional steel beams. Should this cost be charged to the building, added to the cost of the machine, or expensed? Why?
It should be added to the cost of the machine, since the definition of an asset's cost would usually include all costs that are necessary to get an asset fully functional and operational. Therefore, the cost of installing the steel beams to strengthen the foundation should be a part of the cost of the initial asset.
B. The installation of the machine took longer and was more costly than anticipated. In addition to time spent by regular maintenance crew on installation, it became necessary to hire an outside engineer to assist in the installation and in working out the bugs to get the machine running properly. His costs included not only his fee but also his transportation, hotel expense, and meals. Moreover, the foreman of the department and the plant superintendent both spent a considerable amount of time assisting in the installation work. Before the new machine was working properly, a large amount of material had been spoiled during trial runs. How should all of these costs be treated? Why?
It should be treated as the cost of goods sold and operating expense. First, the cost of goods sold is because installation of the machine should acquire raw materials and also the said loss of spoiled materials during the trial run is considered as an expense. Lastly, the operating expense because hiring outside employees like engineers and other forms of human resources. In this case, transportation, hotel expense, salaries expense, and meals are responsible by Halave.
C. In addition to the invoice price and transportation, it was necessary to pay a state sales tax on purchasing the machine. Is this part of the machine's cost? Why?
Yes, because if you are buying a machine, the total cost of that machine will be added up with the delivery fee and the machine itself. Because the delivery is still under direct labor, which need to be paid unless you are the one who will be transporting the machine to your facility.
D. In connection with payment for the new machine manufacturer was willing to accept Halave's old machine as partial payment. The amount allowed as a trade-in was larger than the depreciated value at which the old machine was being carried in the books of the Halave's company. Should the difference have been treated as a reduction in the cost of the new machine or a gain on disposal of the old one? Why? The amount allowed as a trade-in that is larger than the depreciated value in which the old machine was being carried by the book of Halave's company should be treated as a gain on disposal of the old one because the trade-in value is bigger than the depreciated value of asset.